Hi everybody, Thomas Moore at Rebel Income here. Today we're diving into the world of artificial intelligence. In 2024 so far, artificial intelligence and the stocks on the cutting edge of that technology have seen the most attention from investors. They've also generally been the top performance in the market so far. Most people think of AI primarily as it relates to computer systems like gaming, cloud computing, and programming tools. That's a very short-sighted view of the opportunity the technology offers, since it's also finding applications in a lot of industries you might not think about. One of those industries is in healthcare, and more specifically, in medical devices. Recently, Jim Cramer was asked about Medtronic, one of the leading medical device companies in the world. Kramer's been very vocal about his enthusiasm for all things AI, and he didn't hesitate to put Medtronic right in the mix of companies that are leveraging the benefits of AI to useful effect. Robotic-assisted surgery is one of the areas where Medtronic is predicting the most growth in the years ahead, and they're implementing AI-driven tools to enhance the ability these devices have to improve surgical results. Medtronic's CEO recently revealed, for example, that polyps detection improves by as much as 100% with the use of devices that now integrate AI-driven data processing. That's great news. Does it make the stock a good buy right now? Let's dive into the details and find out. Now, over the last 12 months, earnings growth was flat at exactly 0%, while sales grew by 4.68%. In the last quarter, earnings rose by 4%, while revenues increased by about 1.32%. Medtronic's a company that operates with a healthy, expanding margin profile. In the last 12 months, net income was 13.02% of revenues and strengthened nicely to 16.34% in the last quarter. Medtronic also boasts a healthy balance sheet with a little more than $8.3 billion in cash and liquid assets against about $24.1 billion in long-term debt. It's also worth noting that cash was about $7.95 billion a year ago and $7.7 billion in the quarter prior. Medtronic's free cash flow is a little over $4.9 billion for the trailing 12-month period. This number has increased from about $4.6 billion a year ago and $4 billion in the quarter prior. The increase in free cash flow, along with their strengthening net income and improving liquidity, are all good indications that servicing their debt is not a problem. Medtronic pays an annual dividend of $2.76 per share, and it translates to a yield of 4.45% on an annualized basis at the stock's current price. That's attractive for income investors. As far as their value proposition goes, there's a lot of ways to measure how much a stock would be worth, but I like to work with a combination of price to book and price to cash flow analysis. Together, these measurements provide a long-term fair value target at around $91.50 per share, and that means that Medtronic is undervalued with about 14.5% upside from its current price. Let's talk for a minute about the quality of Medtronic's dividend. Management has increased its dividend payout in each of the last 5 years, from about $2 in mid-2019 to the current level of $2.76 per share, which was an increase made in the middle of last year. Despite these increases, Medtronic's dividend payout is only about 52% of earnings, which is a good indication that the dividend is sustainable. An increasing dividend is another strong indication of management's confidence in the quarters and years ahead. Medtronic stock is picking up bearish momentum with the rest of the market right now, dropping from about $87 at the end of March to its current price at around $80. It finished this week by falling below its 200-day moving average, breaking support at around $82. Next support is a little below the stock's current price at around $79, while $82 now marks immediate resistance. A push above $82 should have about $4 of near-term upside, while a drop below $79 could see the stock fall to about $75 before finding its next support point. Medtronic's improving fundamental profile has also strengthened the stock's value proposition over the last few months, to go along with an attractive dividend, which provides a useful passive income source for bargain hunters and about 18% of total long-term upside potential from the stock's current price. The stock's strongly bearish momentum does suggest that waiting for the stock to stabilize at around $80 or possibly $75 could be a smart choice in the near term. But if you're not afraid of the stock's increased volatility, Medtronic is a good-looking value opportunity at its current price. If you like this video, go ahead and give it a like. Help me grow my channel by hitting the subscribe button along with the bell so you'll get notified every time I upload new content. If you really want to leverage the power of my Rebel income system with information you can use every day, sign up for a free 7-day trial on my Patreon page. That link is in the description area of this video. Thanks for your time. I'm Thomas. Talk to you again soon. Happy investing, everybody.